No, but the main issue is about liquidity, meaning um, the volumes that you can trade. Because like I said, we know what the issue is and we know how much it costs, right? We know that we got to remove 50 billion tons. We know on the average price of removing that, it adds up to about $9 trillion. I mean, it's such a massive amount of money. It's, 12% of the GDP, of all the money made in the world in a year.
Hello everyone and welcome back to the CleanTechies Podcast. This is episode 51 and I'm your host Silas Maynor and I'm super thrilled to be here with you again. Thank you so much for tuning in. It really means a lot. Before we get into the details of today's episode, our ask of you is to please be sure to subscribe, turn on notifications, and let us know your questions that you'd like us to ask in future episodes. It's really helpful to be able to answer questions that you might want to hear. So our other thing we want to mention too is what we want to highlight that we can offer to you is if you are a founder or somebody in climate tech with specific needs, we're definitely very glad to make any intros that we can. That could be intros to capital, perhaps you're raising, maybe you have some partnership opportunities you're specifically looking to pursue, or you're looking to hire some talent. Please do reach out. It is definitely, it's my entire goal of this podcast to help climate tech founders and just companies in general to grow and be, to achieve their goals so we can help reverse climate change. So definitely do not be shy to reach out. I'm glad to help in any way I can. And with that, let's get into the details of today's episode. Today's episode, we will be speaking with Demian Klenk, who is the co-founder of 6C Index, which is a carbon capture / upcycling projects index fund. That's the best way I can describe it. That is tied to the blockchain to avoid any duplicate selling and to increase transparency. And this episode does get a bit technical at times, but for folks in the crypto and carbon capture space, this should be an interesting one for you. In today's show, we discussed things from regenerative markets, what are carbon markets, how do they work. We discussed the intersection of blockchain and climate change and climate tech. And we also discussed educating people to be savvy in this age of complex technology. I think that's something I think about a lot is how are the future generations going to be adequately prepared to kind of navigate these waters of complex technology, and a bunch of other things as always. But definitely won't spoil the rest of the show. As always, we do of course before we get started want to make thanks to our sponsors, Next Wave Partners. Next Wave are experts in talent acquisition, recruitment, and retention across the climate tech, renewables, ESG, and technology spaces globally. So if your team is growing and you're looking to make a change, or your team is growing, you're looking for specific talent, or you are particularly looking for a change on your own, definitely reach out to Next Wave. You can do that through their website at next-wavepartners.com, or you can also reach out to one of their consultants directly via their LinkedIn page. Without further delay, let's get into the show. All right, welcome to the show, Demian. How are you doing today?
I'm well. Hey, thanks for having me, Silas.
Yeah, absolutely. I'm really, really excited to have you. I think this is going to be a little bit of a complex conversation since it's something I'm not super knowledgeable about, but I think it's going to be very interesting. So I guess let's just start out with having you kind of give a quick intro to yourself, a bit about your background and kind of what you're doing right now with 6C Index.
Yeah, okay, great. I'm a big proponent of technology. I'm someone who was kind of born smiling, and I've always been a big believer in humanity and that there was a real purpose to, the way that we interact with technology and where it was going. And a few years back, I was introduced to the concept of blockchain or a distributed ledger. And it took me a while to kind of wrap my head around it. But when I finally saw the voting prototypes on Ethereum, I thought, well, this is it. This is the kind of blueprint for a way that we can really enable a true democracy, and it's a technology that should be explored. And from then on, I just became obsessed. I spent all the time I could learning about it and going to meetup groups and following webinars until eventually I was leading them. And I kind of led me into studying traditional finance and market theory and technical analysis. And so I had just spent the last 6 years kind of involved in that. And then I was inspired by Wall Street Bets. Wall Street Bets was an internet forum where, it was the first time that we saw retail traders being able to kind of put together a narrative on trading that created a lot of money or a lot of capital that was able to actually move an asset. And it was based off a narrative of saving GameStop. People probably know it who are not that familiar with Wall Street Bets or the different kinds of mechanisms for trading that it was enabled, but it was about saving GameStop. And I thought, well, what a powerful, interesting kind of decentralized narrative. And what if we applied that to something that was altruistic? I bet you we could have much more powerful sentiment. And so that led me into the carbon market. First, I was looking at water stocks and education stocks. And then I was inspired by carbon and how, there's such an underpinning to the meaning of it. And it's a very measurable kind of asset with a different kind of mutability and problems and opportunities that we'd never seen in a way that has to be directed. And from there, it led me to seeing which ways we could use all the different aspects in blockchain to kind of change how we work with that. And from that, I came up with an economic theorem about regenerative tokenomics. And that is kind of carbon would be the first one, but it's an idea of changing value in the way that we invest in assets.
Mm-hmm. So then, so can you maybe talk a little bit more then kind of just explain on a high level? We'll get into some of the details in a second. Could you explain on a high level what exactly 6C Index is then and kind of what you guys are doing and how you interact with your customers?
On a very high level, I mean, it's a profound new tool to redirect, the narrative and sentiment on how we actually clean the atmosphere. It's a way of taking immature market, which has a lot of new technology that lacks the kind of transferability and the investment and the understanding from the general markets. And we're taking a lot of traditional tools from finance and using them in a new way through blockchain technology to amplify those markets. And
mm-hmm. Could you maybe explain, because this is where it's going to get very difficult for me to understand because I'm not a finance person. So could you maybe explain kind of the general mechanisms, kind of like maybe with some metaphors, et cetera, on how the carbon market essentially works? And is it, I know I've seen some people speaking about, whether or not the carbon markets are a real thing or they're becoming kind of actualized. So if you want to give any history there too as well, feel free to do so.
Yeah, definitely. I mean, I think it's a very important thing for people to start to understand. And if nothing else, that is one of our first jobs, to try to educate people to what the potential is from what the carbon market was and how other regenerative markets can be invented. So the carbon markets have been around for about 20 years, and it was set up after the Kyoto Agreement. And the idea is that different governing bodies around the world would set up emission standards for different sectors. And if you're a company and you're in one of those sectors and you produce less than the standard, you're awarded credits. And if you produce more than the standard, you either have to buy those credits or you pay a fine or a tax. And any credits that are left over are traded in a secondary market. So that's how the market started, and it's evolved to a voluntary side because the emission standards haven't anywhere caught up with our needs. So there's a massive movement of pledges from companies and people to go net zero on their own. And so there's now voluntary registries that measure a project or a company's ability to remove carbon, and then they award them the credits, and then that's sold to people who want to use them to offset their carbon footprints, or they're also sold in a secondary market. So that's where it came from, and it's been awash with a lot of controversy because it was very difficult to, and it's still difficult to measure people's footprints. Also, what it means when you award an allowance or a measure of removal, to keep it consistent. And because a lot of these are really complex systems, it's taken a lot of time to ensure that they're doing what they are. And ultimately, the real issue is that the emission standards and even the pledge standards now aren't enough to solve the issue. And if you're not actually solving the issue, then the carbon market doesn't serve any purpose at all, right? Because the idea is to clean the atmosphere. So a lot of that is changing, and projects like ours are, vehicles like ours are trying to be an aggregate to help those changes. And you have the ability to change to powerful new narratives, and that's kind of what we're doing. So right now, the idea is those companies or individuals, they go and they assess what their carbon footprint is, and the calculators are getting better with technology, but generally it works out to about 1% of your gross revenue is that you need to spend to remove carbon. We have an average price of what it costs to remove carbon, and it's arguable. That's another issue with the market. There's no clearing price like there is for gold or oil. There's, it's very different depending on what country. But as time goes on, the market is kind of narrowing in on some of these issues. But we can generally know how much it costs to remove the carbon, and you can have a general sense of what your personal footprint is. And then it works out to about 1% of your revenue. And if you do that, then you're net zero. And that's what everyone's kind of striving for. The issue and the reason that the carbon market itself is seen as a market failure is that the 1% and the idea of going zero doesn't solve the issue. We have 50 billion tons and growing that we need to remove. And even if everybody got to that 1%, it wouldn't account for, neighboring countries or companies that aren't mandated to do it. So we need to find ways to change that overhead costs to an investment. And that's where derivative programs come in, like ours, where, the way that the carbon market works is that you buy those credits and then you what's called retire them. Each credit comes with a registry number was given either by the government agency or the private registry that created them, and then you retire them so they can never be used again, and they become a dead asset. They become a cost on your books. But through blockchain, we contractually retire them. So they can never be used for any specific individual emission. They can never be used as an offset, but they maintain their collateralized value so that they can still grow as an appreciating asset, and they can be used for alternative revenue models, so that 1% cost can turn into a 2+% investment of your risk on portfolio. And it's feasible and necessary to actually redefine the market. And if nothing else, Bitcoin and crypto has proven that we can create massive market caps, volume sizes of almost 3 trillion with almost no centralized policies. So if we start to apply those to agrarian or altruistic sectors like carbon, or I think that it has the potential to really change the discourse in general, and eventually actually the value system of humanity. I mean, that's how big I think it can go and how important it is if it gets engaged properly.
So I want to go back and try to make sure I understand a couple of these things, right? So let's talk. I want to try to summarize what you've said about the carbon markets, how they work, and see if I have this correct. So let's imagine there's kind of a middleman who is essentially the broker, and then there's a company that can remove carbon from the air, whether that's through, actual carbon capture or potentially carbon sinks or, planting trees, etc. Something that's measurable. When they remove that from the air, they are basically able to trade that for dollars to the middleman who is getting dollars from the company who's looking to offset their operations. Is that correct?
Partially, because it's not just about removal, it's also about allowances that prove that you're below standards that were set. So it's not just removal of carbon. The carbon market also refers to, government allowances or sectors that are going below their emission standards. But yeah, in general, that's the idea that you're creating an asset, and then you have brokers that sell them to people that either are mandated to remove that carbon, or they want to do it as an offset, or they want to do it as a financial investment.
Okay, so I want to get to that in a second. So hypothetically, hypothetically the United States makes every public company has to have a net zero operating. So a country like, say for example, some country in South America may not have those rules, but somebody could build carbon removal kind of projects there, or invest in build those projects, and then be able to sell those credits to those companies in the US. Is that correct? Is that possible?
Yeah, that's already happening. That's exactly what that's how the markets are already worldwide. There's no set clearing price, and they vary in standards, but they are traded around the world. Yeah.
Got it. Okay. So then I think the interesting thing is, and I think you mentioned this, I'm just trying to make sure I wrap my head around this, is that this sounds as though the problem is essentially right now that this is not a universal thing, right? Not everybody is required to do this. So as a result, it's kind of hard to determine what is the true value, because some corporations might be, mandated to do this, or some entities, and some might just want to do it in order to potentially raise their, I guess how the consumers see them, right? As being a net zero company, for example, right? Is that kind of correct? Am I summarizing that properly?
Yeah, I wouldn't call that the problem, because those are different motivations, and those motivations will grow, and they're in a good trajectory. The problem is the price, right? Because it's still at a subsidiary, it's like a subsidized level, right? If we know what it costs to remove the carbon, but it's traded much below that. And so it doesn't make great investment sense. That being said, the carbon markets have been one of the most successful markets there are in the last year and a half, 2 years. They're up about 120% in a lot of them. So it's still, from like an analytical side, a good investment. No, but the main issue is about liquidity, meaning the volumes that you can trade. Because like I said, we know what the issue is, and we know how much it costs, right? We know that we got to remove 50 billion tons. We know on the average price of removing that, it adds up to about $9 trillion. I mean, it's such a massive amount of money. It's 12% of the GDP, of all the money made in the world in a year, right? But how do you move that amount of money? Because the money exists on Earth, and even the investors exist. Even the investors now in the last year have signed pledges to go net zero with that amount of money. But the reality is that we don't have the carbon products that exist. The market doesn't exist, and generally, when you move that amount of capital, that amount of money, there has to be some sort of security, usually a bond level security. So it's protected by a government body or different centralized agencies. And so that's kind of like the argument between environmental activism and finance. Is like, well, it's a market failure until the government comes in and protects that amount of money to be moved. And on the asset managers say, no, the market can help, it will eventually solve itself. And I think crypto is a big example of that. Like I said, we can move it. Crypto is 3 trillion. We need to triple that on a yearly basis, and we start to solve the issue. And I think that the market psychologies, like, it's about price in the end. It's simple. Once the price Right now, to remove it, it's about $200 per ton. It's always measured in 1 metric ton.
Mm-hmm.
We went down from, it was less than 2 years ago, it cost $600. Now it's $200. The highest traded carbon in the world is about $80, right? In Europe, the lowest traded is about 15. Once we get the average above it, the market psychology, the boom psychology will happen. The questions, the motivations that you asked, they're there. People understand it. It's in the sentiment. Like I said, the pledges are there. It's just, I think there's a kind of discourse that wants to become more, agrarian in general, or more, I believe we're set for there. It's just about the right tools to amplify the technology to move the price to get that amount of capital, because it's a very quantitative problem.
Mm-hmm. So I guess I still don't quite understand how does this asset appreciate? Is it just based off of the market kind of perception of how valuable this is?
Well, I mean, that goes back to how do all assets appreciate? Well, they appreciate off of value sets from speculation, or from consumption, or supply and demand, or, so it depends. If we set the supply like, hey, we got to move that 50 billion tons out of the atmosphere, hey, there's the demand. The demand, we're waiting around for politicians to do it. There's debate whether that will ever happen in time or not. I say we can create that demand by creating, using some of the speculative nature of investments, but by creating a new type of asset class, which I call, which is regenerative tokenomics. So that basically you can change it. It's like you can take a value set from and add it to a regenerative activity instead of a consumption, which is normal commodities. But in the end, it's about supply and demand and market psychology.
Mm-hmm. Okay, got it. Yeah, this is breaking my brain just a little bit. I think I've got it. One thing you mentioned before, and this is also in our previous discussion, was typically it costs about 1% of operating kind of budget to offset a company's operations. And then you mentioned something about 2%, investing 2% instead. So could you kind of explain the mentality here again, and maybe go a little bit deeper into seeing this rather as an investment rather than a cost?
Yeah, I think that's a really opportunity to change the narrative as well. From, like you said, like people doubt the premise of the carbon market because, in a sense, it's flawed. Having a mandated cost, or not even a partially mandated cost that adds up to 1% of your gross revenue that actually doesn't solve the issue isn't very motivating, and it just doesn't work as a market solution. There's an all hands on deck kind of approach to solving the climate crisis, which is necessary. There's the offsets, there's all different types of investments at different levels. A lot of them are hard to calculate how they work and how to measure the solutions, and if they're in time. I think if you change the carbon market from a cost based market to an actual investment thesis, and that way you can just equate, instead of spending 1% as a cost, you invest 2% of your revenue, then you're actually doubling the amount of carbon that's removed. As the technologies get better and the cost of removal goes down, the solution will come in. It's called the actual drawdown. It's when we change the amount of carbon from going in the air, and we start going in the opposite direction. And I think it will be one of the most powerful kind of uniting narratives in an investment way, and just in a humanity's sake. And to me, there's no greater road to that kind of than the carbon markets when they're turned on. But like I said, they will never work as a cost. It will have to go as an investment thesis.
Yeah, because I think if it was strictly a cost, it would have to be completely universally applied for carbon tax, and that way, investors couldn't leave one area to go somewhere else, which would of course happen. And then even at that point, if it was universal, there's going to be some countries who want the business who would probably just do a little bit of sidewinding there. So I think that makes sense. I guess maybe to move on to a little bit more kind of broader sense, some other questions kind of about the space. What do you say to people who kind of comment or have criticisms about blockchain and its role in maybe not helping to slow down climate change per se?
I think that's a really valid debate, and I think it's a really important debate. It's been something that had led me to what I'm doing now in many ways, and to try to extrapolate from a bunch of different kind of theories. It goes back to the same idea with calculation, from what is your company or your lifestyle, how much carbon are you producing, how can you offset it, and how do you measure that? And with blockchain, it becomes a very difficult set of metrics, and there's various theories on that. So on the face, it's obviously the majority of crypto mined is done on a proof of work protocol, which is a very consumptive protocol, a very wasteful protocol. It's a very unnecessary database to be using. You have to use all kinds of really energy sucking processors to solve these complex puzzles to win a chance at mining, and the mine, to verify all the transactions. And on its face, it's a very unnecessary, wasteful use of energy, but it's not a straightforward calculation in many ways for that. If you talk to a really hardcore Bitcoin maximalist, their argument would be, well, it pushes green energy in a lot of ways because it pushes up the value of energy. So eventually all of the green energy that's moving and the price of it's going down and demand of it's going up, a lot of that is because of need. And so it's kind of a strange argument that you're pushing demand, so eventually you'll hit up a tipping point and the energy better. Other ideas that a lot of energy on Earth is what's called trapped energy, meaning that it's produced in a place and it's not efficient to transform it. So if you put all the Bitcoin mines in those areas, and then just from the product side and the appreciating value side and the way it pushes innovation, it's much more value than wasted energy. Those arguments ring pretty hollow in a lot of ways to me. They always did, because a lot of the energy is produced in really bad coal plants in China, and it's very immeasurable, and you can't calculate where most of it came from. And under that, they always, well, if you say that to them, then there's always this libertarian argument that, well, eventually we displace the systems, because the real reason that we don't enforce the emission standards or really push the innovation is because of the lobbying system or the arduous centralized policy systems in the world. And Bitcoin is one of the first kind of existential threats to that, and that it could replace the whole system. I'm not a big proponent of that either. I don't believe that that's a necessary solution or would happen, or is there any guarantee that would actually solve the issues? I debate that all the time with different crypto people. Then the next is about the innovation side, and that's where I lean into strong. On the very basic, simple, blockchain gives you the ability to do things much more efficiently. So just for calculating supply chains and understanding how we use energy, and it's there's companies, especially in Australia, that have energy companies to switch everything to blockchain just for efficiencies, so that you have less dead energy and that you're able to give to promote the right kind of energies. And that, there's no doubt, and if you put that into the calculation, in general, crypto is still very wasteful, but every minute it's getting better because it's pushing that kind of innovation and efficiencies and efficiency systems. and then becomes into the other kinds of innovation. And that's like my company, where crypto itself gives us the ability to be creative with revenue models, where we can take, like I said, a dead asset and use a smart contract so that we don't lose its collateral value, but we can still have its ecological, therapeutic value. And that's where it comes in. And it also just starts a different level of creativity on how people move capital markets. And this is still a market issue problem. So, you have to think of all of these things to have a real calculus and understanding. And it's a real kind of changing atmosphere. Those proof of work protocols, it's still the really consumptive ones, are the main ones, but there's all different types. Like, I'm not going to build on one of those, obviously, and we would never use a proof of work protocol. There's ones that are not that bad from regular databases. They're closer, and there are actually all kinds of new experimental ones that use even less than normal databases. But you always tend to give up some of that decentralization in a sense. And it becomes a very kind of complex dance the more you go deeper into, protocols from energy consumption to decentralization. So I find some being happy in what's in the middle and proven, and then leaning really far into the creative narrative side, which I think has the potential to transform the markets and really solve the issue in a lot of ways.
Mm-hmm, mm-hmm. Okay. I'd be keen to understand. One other thing I noticed is that you guys are set up in Wyoming. I think, if I remember correctly, I heard some interesting news in the past about Wyoming being a bit more friendly to, I believe, if I'm not mistaken, a new type of entity kind of surrounding the DAO method. Do you have anything that, any comments or just things generally to speak on that, perhaps kind of broadly on, what Wyoming's doing, why you set up there, and then perhaps how that, I guess this is maybe a little bit off topic, but I'm curious to hear your thoughts about DAOs in general and how they might kind of change the future of the entity kind of frameworks that we work with, that we're used to.
Yeah. Wyoming is a hotbed for registering crypto businesses because they have the most crypto-centric friendly senator there. And she has been pushing for, proper custodial language on which is one of the main barriers to large amounts of capital moving into crypto is kind of defining how we tokenize securities and how we specify the ownership. So they're writing the language and generally doing it in a way that pushes innovation. So that's why everyone's kind of setting shop up in Wyoming. And I don't know how familiar you are with DAOs, which I think is it's one of the most fascinating kind of new applications. And we like to think, we have a framework for our in our white papers, and we like to think that we are building a framework for a DAO 2.0 or even DAO 3.0. I think I think it's an amazing different way to think of ultimately running an ownership on commercial entities. They don't even like to use the word companies generally. As far as we go, I think that we still need to stay centralized by crypto company terms, because we need to be robust, because it's such an immature market and we're an aggregate. We're bringing in lots of different assets and lots of different grading systems with lots of different kinds of metrics and APIs, and we're having to see what works and what doesn't and reweight our index and kind of grow this market. And I think ideally a DAOs will function a lot better when all of those kind of APIs and metrics are fully evolved. And I mean down to companies and people themselves, because if you want to have a company that's autonomous and you want to have the governance completely controlled by staking algorithms, I think it's a beautiful concept and idea, but I think that I would only be comfortable with a lot of them until we work out the better data and metrics. And I think that's why carbon is a great one. Like the SEC recently announced, and they've been doing it in Europe for years, is that publicly traded companies have to give all these new kind of risk assessments. And they're very complex on how climate change affects their businesses when they are doing their asset, evaluations. And that's really complicated because it includes, how the climate change will affect, their sales and their supply and how their assets will be devalued as they switch them. So it makes it very complicated for reinvestment, and they're having to really iron it out, what the numbers look like. And in a sense, it will be something that plays into future DAOs, I think, which at this point isn't that important. Most DAOs, like I said, they're just trying to take the basic rules of running companies and rewriting them in autonomous ways by the way that you hold different stakes in the original utility tokens, or what it is, and it to me, I think it's a great technology. It's a little premature for most applications.
Yeah, I think I find it fascinating. Again, it's not really the topic of this podcast per se, but I do find it quite fascinating, kind of the innovation that's happening there. A while back, I read the book The Company, and it was interesting to kind of realize the innovation around incorporating and doing business, right, coming from basically kingdoms just because of your birthright to then having, people could have easily set up an LLC, for example, now. And I think that this will be the next wave. But again, I think it might be perhaps beyond the scope of this podcast. Maybe one final thing I'd be keen to kind of get your general thoughts on are, especially, again, I only have context for this in the US, but what are your thoughts, generally speaking, on kind of how, because it seems as though innovation is happening very, very, very quickly in a lot of these areas, especially as regards, there's several things we talk about, right? Climate change, carbon markets, crypto / blockchain technology. What do you see as kind of the solution to help people, as they're, as kids are growing up and, going into the workforce, et cetera? What are some of the solutions that you can think of to help make sure people are truly savvy enough and educated on these items to really be able to partake in this future? Perhaps if there's any examples of, this is something, again, I don't remember, but if you have examples of how people kind of shifted over to the world with the internet, I'm just kind of curious to hear your thoughts on how you think this might play out and how it can be managed well.
I think it's one of the most exciting times for young people to pick their paths. The ability to teach yourself and relearn skills and come at life in a new creative way and start a company or work with a company or change an idea, if you or understand a complex technology, but in a way that you can apply it. I think we live in a golden age of tutorials, where there's no limit. The only limit is on your ability to research. I think we're in good hands when it comes to young people with any sort of curiosity, because you just scratch below the surface and there are so many blueprints. There are so many healers and engineers and thinkers out there that are sharing their ideas and pushing things forward and open to anyone to join. I am thoroughly incapable of being bored, as long as I have the internet. It's just not something I can be. And
yeah, I think that's interesting. I feel like that's something that, a lot of people I've had on here share is this kind of just general curiosity. The one thing I guess I worry about a little bit is because schooling systems have to kind of create especially universities tend to be a bit bureaucratic in nature, and they have to create curriculum, and there has to be some kind of rules and strictness and kind of rule to how they do things. I wonder how it will help people to be flexible, because the problem I've noticed is that there's just too much to learn for people who are interested in learning. There's no way to truly even comprehend just a tiny percent of every kind of thing. So finding ways to be able to help people early on decide on their path, rather than forcing them to learn 2% about everything. I think that's going to be a fascinating problem to solve, in my estimation.
Yeah, I think models like the Singularity University are going to be ones where solution based learning, where we use exponentially growing tech and you apply them to real world problems, and you change the learning models, will start to lead the way, and they'll start to capture imagination, and we'll set new kind of guidelines and rewrite the syllabuses as we go.
Yeah. I think it's interesting. I'm actually currently reading through the Steve Jobs biography, and I think that this perhaps is an example. Again, I might lack a bit of the kind of total context on how things were before Apple, but to me, seeing how Steve Jobs was able to kind of really try to fuse the engineering and the design knowledge together and get his people to do so, I would assume that something similar will happen with kind of finding ways to bridge these gaps in, not where everybody has to be an expert in the other person's field, but they'll find ways to be able to understand how to work together and to create harmony. But anyways, man, this has been really interesting, and it's super complicated a little bit at times, but I think it's been a very interesting conversation. Really glad to have you on here. Is there any final thoughts or things you wanted to offer to wrap things up?
Yeah, I just wanted to thank you for your time, Silas. It's been a pleasure talking to you. Just tell the listeners they can go to my website at 6C-index and start to, if they want to learn more and find out how they can invest in these exciting new commodities and how they're going to work to help the world, they can start there. And they can follow us on Twitter as we come out of stealth mode. And and just thank you again, man. It's been a pleasure talking to you, Silas.
Yeah, absolutely, Demian. Really appreciate you coming on, and we'll definitely have to see how things go in the future, and excited for how the carbon markets shake up.
Thanks, man.
All right. Thank you guys so much for listening to today. Please do let us know what you thought of the show. Please share this with somebody who might find it interesting, since our entire goal is, again, to spread awareness and to help kind of educate other listeners about the different technologies out there. Feel free, of course, to reach out to Demian directly and check out 6C in more detail. You can reach him on LinkedIn. The link to his LinkedIn is in the description. And then if you are joining us for the first time, please, of course, do subscribe and turn on notifications so you can be made aware of future episodes. We really appreciate it. Of course, also, if you leave us a review, it really helps to bolster distribution on the various platforms. And if you are interested in becoming a sponsor, we also, or perhaps want to collaborate in some way through a partnership method, please do feel free to reach out. My email can be found in the description as well. Always open to discussing possible opportunities to work together. And if you are also interested in getting more involved in the space, perhaps consider joining the Slack channel, which is also in the description. You can follow our LinkedIn page to more easily interact with the episodes when we post them there, and then with any other folks in the climate tech community as well. And just a quick note on our next episode. Our next episode is going to be with James Henry from MyHeat. This is a company that is doing some pretty, I'd say, very innovative heat mapping. They have a heat mapping technology to help with basically working with the utilities to help affect better efficacy and adoption of utility energy efficiency programs to create true savings and long-lasting efficiency across residential consumers of energy. This one's honestly really fascinating, to be sure, so definitely tune into that. But with that, thank you again so much for listening to this episode of CleanTechies the Podcast, and we will see you next time.